Welcome to Anafram Market Perspectives.
Anafram Market Perspectives, Friday, August 1st, 2025. Hi, everyone, and welcome back to Anafram Market Perspectives. It's Friday, August 1st, the start of a new month and the end of a dramatic week for global markets. Between blockbuster earnings, trade policy twists, and economic resilience, investors had plenty to digest. Let's walk through it all. S&P 500 Weekly Recap. The S&P 500 slipped minus 1.05% this week, snapping its recent winning streak. Despite strength in some tech names, mounting tariff concerns and mixed earnings dragged the index into the red. Market leaders. Microsoft, MSFT, rose plus 4.43% after beating earnings and showing strong AI-driven growth. Meta, skyrocketed plus 8.20% thanks to robust ad revenue and AI monetization. NVIDIA, NVDA, added plus 2.38%, continuing to benefit from AI chip demand. Dragging the index, on Apple, AAPL, fell negative 2.90%, facing questions about iPhone shipments. Eli Lilly, LLY, tumbled minus 8.12% despite strong numbers as investors locked in gains on valuation worries. The financials and industrial sectors lagged as copper tariffs and legal overhangs spooked markets. Overall, while big tech helped cushion the blow, there's a growing sense of unease as the trade chessboard resets once again. Trump tariffs and trade update. This was the week tariffs took center stage. Again. President Trump's self-imposed August 1st deadline triggered a flurry of global negotiations and market reactions. New agreements. The U.S. finalized a 15% tariff deal with South Korea, echoing last week's agreement with Japan. Both cover autos, semiconductors, and pharma. These deals bring much-needed clarity for firms like Hyundai, Kia, Samsung, and Toyota. Nations still facing higher tariffs. Brazil is now hit with 50% tariffs tied to political tensions surrounding former President Bolsonaro's legal troubles. India, once viewed as the next big sourcing hub, faces 25% tariffs, down only slightly from the expected 26%. Analysts say it's a psychological blow more than a structural one, but optimism has certainly faded. Canada faces a 35% tariff despite being the largest buyer of American goods. This comes just as the USMCA agreement approaches its 2026 renewal. Reprieve for Mexico. In a surprise move, President Trump announced a 90-day extension for Mexico, pausing any tariff hikes to allow more time for negotiation. While temporary, this bought some breathing room for North American supply chains and may hint at a broader compromise ahead. Economic data recap. Despite all the trade drama, the global economy showed some resilience this week, though signs of caution are emerging. United States. Q2 GDP rebounded to plus 3.0%, beating expectations and signaling solid growth. ADP jobs report, plus 104,000, suggesting steady but cooling hiring. Consumer confidence climbed to 97.2, the highest in 18 months. Core PCE, the Fed's preferred inflation measure, stayed at 2.8% year over year, showing inflation isn't retreating much further. Personal spending rose plus 0.3%, matching forecasts. Fed holds steady. As widely expected, Federal Reserve Chair Jerome Powell kept the federal funds rate at 4.50%. Powell reiterated that while inflation has cooled from its peak, it's not yet at target, and no rate cuts are on the table until late 2025. His tone, cautious but optimistic. International highlights. Canada's GDP rebounded in June, plus 0.1% after a flat May. Eurozone GDP beat forecasts, growing 0.1% quarter-on-quarter. Japan's industrial production surged plus 1.7%. China's manufacturing PMI fell to 49.3, slipping further into contraction territory. VIX Volatility Index. The VIX crept up to 18.05, reflecting a modest uptick in investor anxiety. Although still relatively low by historical standards, the rise shows that markets are starting to price in potential turbulence, especially as tariff rulings and court decisions loom. Bonus section, ETF and stock picks review. Here's how our picks from Monday performed. ETF, QQQ, Invesco, QQQ Trust. Closed at 564.98, nearly unchanged on the week. Still trading just above the Ichimoku cloud with weakening MACD, showing consolidation, not collapse. Stock, Microsoft MSFT, EPS, $3.65 versus $3.37. Revenue, $76.4 billion versus $73.79 billion. Market cap, $3.96 trillion. After an initial earnings pop, it's holding steady. Ichimoku shows strong support, and MACD remains bullish. Still a solid hold. Stock, Meta Platforms, META, EPS, $7.14 versus $5.85. Revenue, $47.52 billion versus $44.72 billion. Market cap, $1.94 trillion. Meta had a massive breakout, up over 8% this week. Technicals confirm the move. This remains a momentum favorite. Stock, Apple, AAPL, EPS, $1.57 versus $1.42. Revenue, $94.404 billion versus $89 billion. Market cap, $3.1 trillion. Shares are trading below Ichimoku cloud with a bearish MACD. Caution warranted here. Wait for signs of reversal. Stock, Amazon AMZN, EPS, $1.68 versus $1.32. Revenue, $167.7 billion versus $162.05. Market cap, $2.49 trillion. Closed at $234.01, riding a solid uptrend. Ichimoku and MACD both point bullish. One of the week's most stable performers. Investor takeaways. As we begin August, 3 themes dominate. 1. Tariffs are real and uneven. While some countries cut deals, others face steep hikes. The global trade map is being redrawn fast. 2. Earnings still matter. Big tech is leading, but the split between winners, Meta, Microsoft, and losers, Apple, Tesla last week, is widening. 3. Powell's patience is the Fed's message. Rates aren't coming down soon, but the Fed isn't looking to shock markets either. Stay focused on fundamentally strong names and be wary of headline whiplash. Volatility may rise as courts weigh in on trade powers and global supply chains shuffle. That's it for this week's Anafram Market Perspectives. We'll be back Monday with your pre-market update, a look at the week ahead, and new ETF and stock picks. Until then, stay informed, stay prepared, and stay ahead.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.